Incentive stock option demystified. 5 real-world scenarios to navigate ISO taxation. Hi everyone, my name is Tan and I'm an independent, certified financial planner practitioner at Tan Wealth Management. Building on my 2019 article on incentive stock option, ISO. This piece focused on the taxation of ISO. It draws insights from an article written by a TurboTax expert and reviewed by a TurboTax CPA. Citation and resources are available in this article. The goal of this article is to provide a clear understanding of how ISOs are taxed. Navigating the taxation of incentive stock options can be complex, but understanding the rules is essential for optimizing our financial strategy. This video will break down 5 real-world scenarios detailing how tax applies at each stage, from exercising our options to selling our shares. We will explore disqualifying versus qualifying dispositions, the role of alternative minimum tax, and how to calculate our cost basis and potential gains, whether we are holding our shares for the long term or selling them within a year. This guide simplifies the process and helps us avoid common pitfalls. Let's dive into the master of intricacies of ISO's taxations and make informed decisions about our equity compensation.
Example 1. Exercise ISOs and hold the shares. Grant date June 1st, 2020. Exercise date July 1st, 2021. Sale date unsold. Regular tax liability. No tax liability. Our employer will not include any compensation related to our options on our Form W-2. We do not report anything on Schedule D, capital gains and losses. AMT. The bargain element is the difference between the market price of the stock at the time of exercise and the exercise price. Report the bargain element as a positive AMT adjustment on Form 6251 Alternative Minimum Tax Individual, Line 2I. We should receive Form 3291 exercise of a incentive stock options under Section 422B when we exercise our ISO. The market price minus the exercise cost and then times the number of shares. $100 minus $1 times 1,000 ISOs equal 99,000. Report the bargain element of 99,000 as income for AMT purposes for the tax year 2021. Example 2. Exercise options and sell shares within the same calendar year. Grant date June 1st, 2020. Exercise date July 1st, 2021. Sale date December 31st, 2021. Regular tax. Disqualifying disposition. A failure to meet the holding period requirements result in a disqualifying disposition of the stock purchased by exercising a statutory stock option. In that event, the employee has compensation on the income on the date of the disqualifying disposition equal to the difference between the exercise price and FMV of the underlying stocks on the date of exercise. If the stocks at issue was restricted, 11, subject to a substantial risk of forfeiture, the income is the difference between the exercise price and the FMV on the date the restriction elapsed. In the event of a disqualifying disposition, the employer is entitled to a corresponding wage deduction. Pursuant to Treasury Regulatory 1.6041-2A1, the compensation from a disqualifying disposition is considered wages, should be reported on employee Form W-2, and is deductible on the employer income tax return. However, the income from disqualifying disposition is not subject to FICA, FUTA, or FITW. For information regarding employment taxes, see Notice 2002-47. FICA, Federal Insurance Contribution Act. FICA taxes fund Social Security and Medicare programs. Employers and employees both contribute to FICA. Social Security, 6.2% up to a wage-based limit. Medicare, 1.45%. No wage-based limit, but an additional 0.9% for high earners. Total FICA for an employee, 7.65%. 6.2% plus 1.45%, with the employer matching this. FUTA, Federal Unemployment Tax Act. FUTA funds federal unemployment benefits. Only employers pay FUTA taxes. Employees do not contribute. FUTA rates, 6% on the first 7,000 of each employee's wages. Employers may receive a credit of up to 5.4%, reducing the effective FUTA rates to 0.6%. FITW, Federal Income Tax Withholding. FITW refers to the federal income tax withheld from an employee's paycheck based on earnings, filing status, single, married, number of allowance, from W-4. The tax rate is determined by the IRS withholding tables and varies widely depending on the individual's situation. Disqualifying disposition. A disqualifying disposition generally occurs when an employee sells stocks from incentive stock options before meeting specific holding period requirements. The earning income from such a transaction is treated as wages but is not subject to FICA, FUTA, or FITW, although it is still subject to federal income tax when reported. Bargain element tax as earning income shown on W-2 or added to other income on Form 1040. The bargain element of $99,000 tax as earning income is the gross price. The total cost is calculated by multiplying the actual price paid per share by the number of shares purchased and then adding any amount reported as compensation income. If there are fees relating to the purchase of the share, the total cost basis is the exercise cost plus the bargain element. $1 times 1,000 plus 99,000 equal 100,000. The sale price is the fair market value at sales times the number of shares. $100 times 1,000 equal $100,000. This gross amount should match our 2022 Form 1099-B. We should receive Form 1099-B from our broker after the end of the year. Be sure to include the exercise cost in our cost basis. It is important not to overlook this, as we don't want to pay taxes again on the exercise cost, which has already been taxed. Sale price minus cost base equals short-term capital gains or loss reported on Schedule D. $100,000 minus $100,000 equal $0. AMT. No AMT adjustment because we exercise the options and sell the shares in the same calendar year. Example 3. Exercise options. Sell in the next calendar year and within 12 months of purchase. Grant date June 1st, 2020. Exercise date July 1st, 2021. Sale date May 1st, 2022. Regular tax. Disqualifying disposition. In the year of sale, the lesser of the bargain element or the actual gain from the sale of the stock is compensation income on Form W-2. Tax as earning income. Market price minus exercise price times number of shares equal bargain element. $100 minus $1 times 1,000 equal $99,000. Sale price minus exercise price times number of shares equal actual gain from the sale. $90 minus $1 times 1,000 equal $89,000. The bargain element of $99,000 is higher than the actual gain from the sales of $89,000. Thus, the compensation income is limited to $89,000. $89,000 should be included as income on Form 1040, 1A or 1H. Tax year 2022, the year of sale. In order to be taxed only on the lesser of the two calculations, $99,000 versus $89,000 in our example, the sales cannot be any of the following. 1. A wash sale. If you repurchase shares in the same company, such as through an employee stock purchase plan within 30 days before or after the sale of the shares obtained from the exercise of the option, some or all of the sales will be considered a wash sale. You will not be allowed to report the lesser calculation as income for the shares sold in a wash sale. You must report the full $99,000 as income. 2. A sales to a related party. If you sell the shares to a related party, a member of your family, or a partnership or corporation in which you have more than a 50% interest, you must report the full $99,000 as income. 3. A gift. If you gave the stock to an individual or a charity, rather than selling the shares, you must report the full $99,000 as income. Details of the transaction will be reported on Schedule D. Sale shares within 12 months of exercising is a short-term sales. Sale price times shares sold equals sale price. $90 times 1,000 equals $90,000. The broker should report $90,000 on Form 1099-B, tax year 2022, in the year of sale. The cost basis is the actual price paid per share times the number of shares, and then plus the compensation amount reported in the year of sales, Form 1040, tax year 2022. $1 times 1,000 plus $89,000 equal $90,000. Sale price of $90,000 minus cost base of $90,000 equal gain of $0. AMT. We should have reported the bargain element as income in the year we exercised our ISOs and did not sell the shares on Form 6251, alternative minimum tax. Market price minus exercise price times number of shares equal bargain element. $100 minus $1 times 1,000 equal $99,000. Bargain element of $99,000 for tax year 2021. In the year of sale, Form 6251, a AMT adjustment is added to the stock cost basis for alternative minimum tax purposes, but not for the regular tax purposes. Sale price minus exercise price times number of shares equal actual gain from the sale. $9 minus $1 times 1,000 equal $89,000. Actual gain on the sale minus bargain element equal net gain. $89,000 minus $99,000 equal negative $10,000 adjustment for AMT purposes. It's not clear in the TurboTax article if it is a negative AMT adjustment. If the formula is the same as in example 5, the $10,000 should be a negative AMT adjustment unless there is an exception to the rules. As mentioned at the beginning of the article, I drew insights from the TurboTax article. I also uploaded this content and left out the AMT calculation in example 3 into a large language model to see what the answer would be, and the information matches this calculation. This scenario introduces the rule of being taxed on the lesser of the bargain element or the actual gain from the sale of the stocks in the year of sale. I often see this scenario occur when companies that went public through an initial public offering via a special purpose acquisition company. Example 4. Exercise options and sell at least 1 year after purchase but less than 2 years from grant. Grant date June 1st, 2020. Exercise date April 1st, 2021. Sale date May 1st, 2022. Regular tax. Disqualifying disposition. In the year of sale, the lesser of the bargain element or the actual gain from the sale of the stock is compensation income on Form W-2, taxed as earned income. Market price minus exercise price times number of shares equal bargain element. $100 minus $1 times 1,000 equal $99,000. Sale price minus exercise price times number of shares equal actual gain from the sale. $150 minus $1 times 1,000 equal $149,000. The bargain element of $99,000 is lower than the actual gain from the sales of $149,000. Thus, the compensation income is limited to $99,000. $99,000 should be included as income on Form 1040, 1A or 1H. Tax year 2022, the year of sale. Details of the transaction will be reported on Schedule D. Sale shares after 12 months of exercising is a long-term sale. Sale price minus shares sold equals sales price. $150 times 1,000 equal $150,000. The broker should report $150,000 on Form 1099B. Tax year 2022 in the year of sale. The cost basis is the actual price paid per share times the number of shares, and then plus the compensation amount reported in the year of sales Form 1040, tax year 2022. $1 times 1,000 plus $99,000 equal $100,000. Sale price of $150,000 minus cost basis of $100,000 equal gain of $50,000. AMT. We should have reported the bargain element as income in the year we exercised our ISO and did not sell the shares on Form 6251, alternative minimum tax. Market price minus exercise price times number of shares equal bargain element. $100 minus $1 times 1,000 equal $90,000. Bargain element of $99,000 for tax year 2021. In the year of sale, Form 6251, a AMT adjustment is added to the stock cost basis for alternative minimum tax purposes, but not for the regular tax purposes. Sale price minus exercise price times number of shares equal actual gain from the sale. $150 minus $1 times 1,000 equal $149,000. Actual gain on sales minus bargain element equal net gain. $149,000 minus $99,000 equal $50,000 adjustment for AMT purposes. Example 5. Exercise options and sale after 1 year from purchase and 2 years from grant. Grant date June 1st, 2020. Exercise date July 1st, 2021. Sale date August 1st, 2022. Regular tax. Qualifying disposition. A qualifying disposition occurs when an employee holds the stock for at least 2 years from the date of grant and 1 year from the date of exercise. If the specific holding period requirements are met, then the employee recognizes capital gains or loss on disposition of the stock, but there is still no deduction for the employer. If the option price is not fixed and determinable at the time the option is granted, the option price will be computed as if the option had been exercised on the grant date. See Treasury Regulations 1.423-2 K1II. This compensation income is not subject to FICA, FUTA, or FITW. See Notice 2022-47. Any additional gain on the disposition of the stock is categorized as capital gain. See IRC 423C. The employer received no tax deduction for the compensation recognized by the employee under this special rule. See Treasury Regulation 1.423-2 K1II. Our employer will not report any compensation amount for this sales on our Form W-2. Schedule D. The net gain, which is the difference between the sale price and the exercise price times the number of shares, and then minus any exercise and sale costs, such as commission or trade fee, is taxed as a long-term capital gain or loss reported on Schedule D. Sale price minus exercise price times number of shares equal net long-term gain. $150 minus $1 times 1,000 equal $149,000. AMT. We should report the bargain elements as income in the year we exercised our ISO and did not sell the shares on Form 6251. Alternative minimum tax. Market price minus exercise price times number of shares equal bargain element. $100 minus $1 times 1,000 equal $99,000. Bargain element of $99,000 for tax year 2021. In the year of sale, Form 6251, a AMT adjustment is added to the stock cost basis for alternative minimum tax purposes, but not for the regular tax purposes. Sale price minus exercise price times number of shares equal actual gain from the sale. $150 minus $1 times 1,000 equals $149,000. Actual gain on the sale minus bargain element equal net gain. $149,000 minus $99,000 equal $50,000. Adjustment for AMT purposes.
What have we learned? To double check our calculation for the regular tax liability, we can ask ourselves 3 questions. What are our gross proceeds? What is our cost basis? And what is our net gain?
For example, if our gross proceeds are $150,000, our cost basis is $50,000, and our net gain is $100,000, the different amount taxed should add up to our net gain. Below are various scenarios illustrating this. 1. $100,000 tax at earned income plus $0 tax at short-term capital gain plus $0 tax at long-term capital gain equal $100,000. 2. $6,000 tax at earned income plus $40,000 tax at short-term capital gain plus $0 tax at long-term capital gains equal $100,000. 3. $60,000 tax at earned income plus $0 tax at short-term capital gains plus $40,000 tax at long-term capital gains equal $100,000. 4. $0 tax at earned income plus $0 tax at short-term capital gain plus $100,000 tax at long-term capital gain equal $100,000. For AMT reporting, in the year we exercised the ISO and did not sell the shares, the bargain element is an AMT positive adjustment. In the year we sold the share, an adjustment is added to the stock cost basis for alternative minimum tax purposes, but not for the regular tax purposes.
Key takeaway. For regular tax liability, always confirm gross proceeds, cost basis, and net gain loss. For AMT, account for the bargain element in the year of exercise and adjust the cost basis in the year of sale. By understanding these scenarios, we can navigate the complex taxation rules for ISOs and optimize our financial decision. Please note that this material is for educational use only. Tax law are written in pencil that can always be rewritten. Tax law are complex. There are exceptions to the rules, and it is constantly changing, so don't do it alone. Be sure to talk to a qualified professional before making an informed decision. I hope you enjoyed this video and thank you for watching. Until next time, this is Tan, your trusted advisor.